Hello, it's Jonathan Wellham of ROCKLINC Investment Partners, and I'm looking forward to introducing our new fund on this webcast. Before I do that, I just want you to make note of the disclaimer that will cover us from a legal and regulatory perspective, and then we'll now jump right into it here. Now, in terms of the outline of the presentation, I'll just mention a little bit about ROCKLINC, an overview, our investment philosophy, some of the investment challenges that we continue to see in the market, along with a real issue that's certainly concerning us and I think a lot of other Canadians and in fact many people around the world as we see government overreach. This was particularly demonstrated in Canada with the Emergencies Act that was pulled on the February the 14th. And then our new fund, which we call the Kokomo Fund. Okay, now, so in terms of ROCKLINC, just a quick overview. Private investment firm. We were founded back in 2010, which most of our clients know. And we currently are sitting on assets of about $220 million and approximately 230 households. Our focus is to create portfolios of excellent businesses. Our investing is based upon independent thinking and deep understanding of investments, certainly a focus on current realities, and rooted in an understanding of the past so that we understand, again, how markets work and how market cycles work. Right now we're seeing a down market, and this is not unusual, and we need to be very prudent and careful in terms of how we're investing based upon the market. And then an interdisciplinary approach. We build a worldview. We try to look at the world in a very holistic approach, and then that filters down into the different businesses and sectors that we're investing in. Now, in terms of our investment philosophy, very briefly, we try to buy excellent companies. That means companies that have high returns on capital, strong balance sheets. This is very important in the current market that we find ourselves, along with free cash flow generation and a reoccurring revenue so that we can really put a value on a company. We run focused portfolios, 20 to 30 stocks. We're not trying to be all over the place. We really want to identify and understand the companies well. We like to be long-term holders so that we can tax defer compounding. It's very important in a market where there's a high tax rate that we can defer taxes and then compound that deferral. You're going to have much higher after-tax rates of return over time. We want to purchase at a margin of safety, which means there's a strong attention to value. Valuing these companies is critical. That establishes your book value and eventually your long-term rates of return. And then we want to understand the current economic environment and the political backdrop, which is what's influenced us in terms of launching this new product, the Kokomo Fund. The investment challenges just seem to just continue to grow. We've mentioned these challenges in the past, and none of them are new, with the exception of increasing government overreach. But let me just mention these quickly. First of all, global debt levels. They're off the charts. We're now over $300 trillion worldwide, and that's in US dollars. It used to be 100 trillion 20 years ago. We now basically have tripled that number in the last 22 years. Unfunded liabilities, that means all these government promises, pensions, healthcare, the things that governments have said that they're going to commit to, but are unfunded. They haven't set aside the capital. Those are in many cases 2 to 4 times the GDP of a country, so they're very large and growing. Aging demographics, that's a big concern. Monetary policies that we've seen really since 2008. I mean, you could argue even before then, but certainly seen in a very aggressive manner. Monetary policies of printing money, quantitative easing, QE, you see that on your chart. And also repressing the interest rates, keeping interest rates at record lows. That's been going on for 14 plus years. Right now, though, we're seeing a change because of the high levels of inflation, all the money printing, supply chain issues that are as a result of COVID and lockdowns, and some of just the inept and incompetent government decisions that have been made. We're seeing a high level of inflation. This is leading to monetary tightening, which is causing indigestion for the markets right now. And so we have to be very patient as interest rates are going up and as they're trying to pull money out of the system. Expect volatility. This is not a surprise in the least. And then the last issue, which we're very concerned about, and again, was one reason why we've launched this Kokomo Fund, is government overreach. We're seeing it all around the world, but in particular here in Canada, we saw an exceptional overreach when it came to the Emergencies Act back in February of this year. So government overreach, just to quickly give you a couple points here in terms of the Emergency Act, you can read the slide at your leisure there. Bottom line is this is an extreme situation which in an act of power on the part of the government that should only be used in incredibly limited circumstances. And in the first point there, you can see that comes right out of the Emergency Act, and basically it should not be used unless there's just no other alternatives. So what happened when we saw the Trudeau government pull this Emergencies Act, we saw that really we do have a government that is not afraid to overreach, not afraid to take away our freedoms. We've seen this in a number of bills, even currently right now, Bill C-11. This is an internet bill which is going to basically give the government complete control over what's on the internet in Canada. There's a number of these bills I could talk about, but the reality is the government in Canada is becoming quite tyrannous, and that's not an overstatement. We've also saw that crowdfunding platforms now have to register with FinTrack. That's the agency that monitors all financial transactions. Our Canadian institutions, our Canadian banks have been weaponized against political opponents of the government. Only Scotiabank, as far as I have heard, is the only bank that has actually apologized for freezing accounts. So the other charter banks haven't even apologized, but they again froze accounts without due process and without evidence of what was being purported. And the last point there I make is that Justin Trudeau and Christy Freeland made statements that were bald-faced lies to the Canadian public in order to justify the Emergencies Act. The hearings in the Commons on Parliament Hill have demonstrated that the information that they were giving out was not correct. It was not accurate. And this should be a concern to us, and yet we're not seeing heads roll in terms of our government. So this should cause all Canadians to be concerned about government overreach. And so what are some of the implications of what we've seen in Canada over the last 5-6 months? I think, first of all, keep a little extra cash at home. Banks are not in the business anymore of handing out cash to you. We saw that in February, and the ATMs machines are not really stacked with a lot of cash. So be prepared to have a little extra money at home. Think about owning small amounts of physical gold or silver. These are monetary substitutes. They allow you to do bartering, and they give you a little bit of financial flexibility. Try to open a bank account or an investment account in a different country from the one that you live in. So again, it gives you an arm's length financial investment that you maybe can get at if in fact your own government were to freeze you out of your accounts. If possible, own assets outside of your own country. In your own area which you call your principal residence. Examples could be investment accounts, real estate, a business. Anything that gives you, again, multi-jurisdictional exposure is a prudent thing to do if possible. I know that's not always possible for people, but if possible. And then try to maintain a second passport or have a permanent residence status in a safe and free country. So this becomes very handy in case you have to leave quickly and you want that flexibility. So the Kokomo Fund here, let me just talk a little bit about this overview. First of all, it's an investment based in the Cayman Islands, and Cayman is the #1 jurisdiction in the world for offshore funds. And so we're happy to introduce a fund from the Cayman Islands. The Kokomo Fund will have a Cayman custodian, Cayman administrator, legal counsel, and fund auditor. And the fund will be open to Canadian and non-Canadian investors and regulated by the Cayman Islands Monetary Authority. They call that CIMA. And the Kokomo Fund will be comprised of a portfolio of ROCKLINC's top 20 to 25 companies. So it's going to be very consistent with the way we manage money, and it'll be looking at our top companies, the best companies that we want to own, very focused. Now, one of the questions we have is why Cayman Islands? And so we've just put down a couple of points here just to apprise you of what's going on in the Cayman Islands. The Cayman Islands basically are a British overseas territory. Their legal system is based on the English common law, providing them with a very strong rule of law. They're also governed by a parliamentary democracy. The Cayman Islands is a world leader in the establishment of offshore funds. It's a tax-neutral platform, stable economy, sophisticated banking system, confidentiality, and professional financial service industry, which is very large in the Cayman Islands, make it one of the most attractive places for fund managers to go and to have their funds registered and regulated. And believe it or not, approximately 80% of the world's hedge funds are domiciled in the Cayman Islands, which gives you a sense of how important the Cayman Islands are to the investment industry. And I might add that the number of accountants, lawyers, financial executives, and professionals in the Cayman Islands is just very, very large, and the quality of these people is some of the very best in the world. Now, the reasons to invest in the Kokomo Fund, really, we would say growth, quality, and protection. First of all, growth. We're going to own a portfolio of high-quality businesses producing, compounding cash flow streams with the potential for very significant capital gains. Quality, access to ROCKLINC's proven investment philosophy in a fund domiciled in the world's premier offshore market. And then protection. This gets back to concern over where your money's located. It allows people to diversify their wealth across multi-jurisdictions for an added layer of asset protection. So this will allow our investors to put money into a different country, different area, one of the best in the world for protecting your assets and protecting your investments, and make it more difficult for the government in which you live and reside to get access to that money. And so we think that's very, very important in terms of diversifying that particular risk. The Kokomo Fund, I just list here an indicative portfolio. What I mean by that is these are some of the holdings based upon valuations at the time that we could hold in the fund. The fund is not commenced yet. And so these are what we call indicative holdings, or an indicative portfolio. And so we talk about companies like American Tower, the world's leading wireless tower company, Autodesk, Brookfield Infrastructure Partners, Church & Dwight, CoStar Group, Franco-Nevada, Honeywell International, Roper Technologies, Suncor, Wheaton Precious Metals. These are companies, the kind of companies, the quality of companies that we would want in the Kokomo Fund. And again, very similar to how we manage our other assets. So just a couple of quick particulars and details about the Kokomo Fund before I finish the webcast here. Estimated launch date early in July, so it's coming fairly quickly here. We're just really dotting I's, crossing T's on the offering documents. The minimum investment will be $100,000 US because this was going to be for accredited investors, and that's the minimum in the Cayman Islands. The management fee will be 1.2%. There'll be no performance fees, anything like that, just a management fee on the fund, very similar to what we charge across our investors already. The fund manager will be ROCKLINC Investment Partners, myself, along with Jesse Vandermeer and Andrew Chang as portfolio managers. Will be working on this along with research analysts that we have. It'll be priced monthly, and there'll be monthly liquidity. In other words, you can purchase it monthly and come out of the fund monthly. So it's very liquid. This is not an investment that will be tie you up into a long-term relationship with the fund. We want you to be a long-term investor, but if you need money, you can go in and out of the money very easily with no redemption costs or fees. And so we encourage you, if you're interested in the fund and want more information, contact ROCKLINC Investment Partners for more information. We've actually got a list of investors who already want to go into it day one, and that list continues to grow. And if you'd like to be on that list or want more information, please reach out and contact us at ROCKLINC. You can contact anyone here in the firm, and we'll be very happy to respond to your questions. So that's the Kokomo Fund, and we're very excited with the launch of the Kokomo Fund, and again, a further enhancement of our product offering for our clients. We appreciate your support. We know it's been a volatile market. We love the companies that we're invested in, and they continue to do well, and we continue to focus on buying companies and adding companies that are not only great businesses but are trading at very attractive prices. And believe me, over the last couple of months, some of those prices have become even more attractive, and so that will be, in the long term, a great opportunity to generate even higher rates of return going forward. So thank you very much. Wishing you all the best, and we'll be looking forward to connecting with you in the next number of weeks. Thank you. Bye now.